Hi there, welcome to Grain TV. I'm Kevin McNew. It is Wednesday, January 25th, and another mixed day in the markets with some consolidation going on in wheat and corn after yesterday's big move. Let's take a look at Grain Hedges trading platform, see where we closed. In Chicago, corn closing 3 higher at 366 and a quarter on front month March. Beans bouncing between 1050 and 1060 for most of the trade today. Managed to close 3 cents lower on the day, and wheat in Chicago off a penny and a quarter at 425. There was very little news of major market significance today. There was some export sales announced this morning by USDA. Another corn deal announced, this time 141,000 metric tons to unknown destinations. That's on top of yesterday's deals that were done in corn as well to Mexico. So, corn getting a little bit of buying interest here. Overall, the market seems a little skittish right now because we've got a lot of discussions about what's going to happen to the renewable fuel standards and the policies that have been in place for the better part of the last decade that have stimulated biofuels production. So those policies are sort of in question right now as the Trump administration comes in and takes over the rudder of the ship. Right now, there's no real policy changes that are going on other than the EPA announced they would be postponing enactment of their 2017 renewable fuel standards policies that was signed under the Obama administration. So that is on hold until Trump meets with officials from the EPA. So overall, nothing earth-shattering going on, but there is some concern what may potentially happen down the pipe. Speaking of ethanol, we did get EIA's ethanol data that came out today. So somewhat more of the same. We saw production at very high levels, although off a tick or two from last week. On the other hand, stocks continue to balloon. We have seen ethanol stocks grow sharply in the last 3 weeks. In fact, let's take a look at this chart here comparing last year's ethanol stocks versus this year's ethanol stocks in the red bar. And what you'll notice, we were running for the most part the last half of 2016 running behind last year in terms of stock levels. In fact, as of 3 weeks ago, we were 15% less stocks than the previous year, 2016. But the last 3 weeks, we've seen that 15% deficit close to actually this week's numbers posting just a fraction above last year's numbers. So we're quickly seeing stockpiles build in the face of higher production. Some of that I attribute to the slowdown in exports. Obviously, China has said they're going to impose a tax on ethanol from the U.S. as they try to build out their own ethanol industry. So we're seeing ethanol prices start to weaken as a result. Margins for processors are starting to weaken. We saw margins that were very favorable back in December have really eroded quickly in the last few weeks as these stockpiles have built in the ethanol sector. Let's take a look now and switch to March beans. We've been focusing on this the last few weeks. There's been a fair amount of activity going on here. Yesterday's close, remember, was a sharp rally, or a recovery rally, if you will, back to the 1059 area on the close yesterday. But again, overnight we come in and the market immediately moves down and goes back and tests that 1051, 1050 mark. So 1050 has held up on not on one occasion, 2 occasions, but 3 different occasions, 2 times in yesterday's session, another time in the overnight session. You can see we didn't come back to it in the day session, although we did come down to 1052 on several occasions, testing as high as 1060. So we've been very range bound in the last 2 days of trade between that 1050 and 1060 range, with the bulls and the bears sort of fighting it out in the middle with no real firm direction. I wouldn't be surprised to see us push above 1060. I think we've had if you factor 1050 as the low here, that would correct off of 30 cents from the high at 1080. The bears have tried to beat it down below 1050 on 3 different occasions and haven't gotten there. So I wouldn't be surprised to see us start to move to the other direction as we get closer to the end of the week. Looking ahead to tomorrow, we will have weekly export sales from USDA. Expectations for that report, 200 to 400,000 for wheat. Soybeans soybeans 450 to 650, and corn 700 to 1.0 million metric tons. Those are the expectations going into the report 7:30 Central tomorrow. Keep in mind, last week we had soybeans actually exceed expectations. We'll be interested to see whether they can do that again in light of no export sales announcements of any significance in the last week. That's all we've got for today on Grain TV. As always, visit us online at grainedge.com, take a demo of our trading platform, and get our morning commentary and our technical alerts delivered in your email inbox. Have a great day. We'll talk to you tomorrow.